This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Patrick, let's move on now to this week's post-game chart deck. Talk us through what's going on here.
All right. Well, listen, I started here in the first four charts, just breaking down the U.S. equity markets into some of the different indices, the S&P 500, Nasdaq, and the Russell. And really what I wanted to capture here is while the S&P has, on page 2, been working its way higher, it has not yet broken that first vaccine news high. But it has been constructively working its way higher, and it's been relatively bullish. But it hasn't broken that out. When you look at the Nasdaq on page 3, it is in a similar situation. It really sold off on the first vaccine news. It's really been a very quiet place, but it's edging back toward those highs. But really on page 4 is where the real story is, which is that the small caps gapped higher and just have not looked back. I mean, we have more or less seen the small caps running, and we're seeing just strength in so many of those value sectors that were beaten up, the financials, the energy stocks, the resource names. All of these different subsectors are really taking substantial money flow in a rotation. And that's where on page 5, I think that there's the interesting story, which is this idea that there's a new rotation underway. Now, this chart only captures about a year of data, but if you go back even 2-3 years, there's been one pronounced trend, and that is that the Nasdaq and growth story have been materially outperforming that of the small caps. And for the first time, we're seeing a scenario where this trade is kind of basing. And the bigger question is, have we seen a major reversal? When I showed this chart several weeks ago, it was just literally the first part of the breakout. And we were asking the question, is it actually just a fake out, or is there actually going to be real follow through on this? And so far, that rotation of follow through has materialized and has continued. And I wonder whether or not this is going to be a sustained trend going forward in the coming weeks.
Patrick, I find it very interesting that the small caps are where the outperformance is, and it makes me wonder, to what extent is this being affected, particularly in the United States, by the passive investment programs that just tend to keep investing regardless. What about the international stocks? First of all, what are your thoughts on that question? But what are the international stocks telling us in terms of whether this trend is, hey, the vaccine news was it's the sell the news moment, or whether we're actually headed higher from here?
Yeah, well, on page 6, I was showing just a chart of the Nikkei. And in the prior weeks, we were showing just how these breakouts have been occurring in Europe as well on the Eurostock 50. But this has been a breakout in global equity, whether you're talking emerging markets or developed markets around the world, whether you're talking KOSPI, whether you're talking about any of the EM spaces or India or China. We're seeing global equity in full breakout mode, Brazil, Canada, Australia, and it's actually a robust rally. And another really interesting trend is just simply the fact that global equity is really starting to participate, but will it outperform the U.S. equity? Because that's another storyline that's been there, is that you wanted to own U.S. equity because it was the best performing global equity market out there, and it had the safe haven of a U.S. dollar that was relatively stable. But are we now entering a period where this is really going to now distribute the money more evenly, and whether there's more alpha or upside out there in these global equity markets? One way or another, Nikkei broke out in a pretty big way, and this chart is only showing the 1-year high, but we're breaking at some pretty significant levels. And it'll be really interesting to see whether or not this continues to be a market that continues to outperform in the coming year.
Patrick, let's move on to the dollar index, because, of course, the question you have to ask yourself, at least about the U.S. indices, are the stocks really going up, or is just the denominator that they're priced in going down? The U.S. dollar hasn't broken down below that key support level yet, but boy, it's trying to.
Well, and it's certainly if we close down here at the end of the day, then this will actually be the lowest close, even though we had that little shadowed candle where it traded in that late August, early September, a little bit lower. But it's not just about the technical level itself. It's the fact that every single rally that the US dollar has tried to put together in the last several weeks or even last several months almost immediately gets faded, and the distribution is very systematic. And so the sellers are clearly the dominant force in this price action. And I don't know what kind of miracle the dollar bulls will be able to pull out to create a reversal here, because with this type of negative price action, it looks like it could just break through this level the way gold did. And really at this stage, if this level gives out, we're talking about the next major target and support line being that 89.90 level, which was the 2018 lows. And I think this is one of the single most important macro trends to watch going into the rest of the year, because if we spend the next 3-4 weeks in a serious dollar downtrend, the macro implications are pretty significant, right?
Yeah, and I wouldn't be surprised. I think it's probably coming, and it's going to have significant implications for crude oil and for gold and everything else. Let's move on to page 8, which is basically forecasting the price of Canadian beer for Americans on after the pandemic ends. What is this chart telling us, and does this mean that you're buying the beer at the next MacroVoices Live?
that I am. But what we have here is a U.S. dollar that continues to deteriorate against the Canadian dollar. But this is, we were showing the Aussie dollar last week, but this is a trend that continues. But Canada is a little more sensitive to the commodity story than most currencies. And with oil breaking out the way it is, it'll be really interesting to see whether that ends up being a headwind for the U.S. dollar and actually drives a breakdown of that U.S. dollar CAD to the downside. And so we're at the edge of the cliff on this currency pairing as well. But this is where I wanted to go to chart 9, because the Canadian dollar does somewhat link to crude oil. And there's this chart on crude. This is the January futures contract. And there's the break of that August-September high. And we've just broken out, and everyone's in disbelief at this stage of the momentum that's here. But this is like an acceleration in the momentum. Is this a complete fake out in your mind, or is this got follow through? Because technically, the fact that it was able to beat all of those summer highs with such velocity is a testament to some serious buying pressure.
Well, I think there's two sides of this story, and it could go either way, really. I mean, on one hand, you're right that it feels like it's overdone in the face of a massive increase in coronavirus infections and hospitalizations and deaths right now. And the vaccine is not until into 2021 sometime and so forth. The thing is, the bullish case in the second half of 2021 is really, really strong. And the arguments are, first of all, what people are being told is that by June, everybody's going to be vaccinated. I'm very skeptical of that. I think it's more like by Christmas, most people will be vaccinated. But the market's being told that it's by the middle of the year. And the other thing, although it hasn't been confirmed yet, if you listen to not just Art Berman, but quite a few oil analysts, they're all saying U.S. production is going to fall off a cliff in 21, and there's nothing that can be done to stop it. So what we have is a setup for demand to recover as supply is collapsing, and supply is expected to collapse in a way that cannot easily be remedied because of a lot of the long-lasting impacts that the coronavirus crisis had on the U.S. shale industry. So is the market just missing the current news, or is the market correctly looking past the current news and anticipating that there has to be a really big rally before 21 is over? And, maybe just the vaccine news was the catalyst to unleash those animal spirits to get it started now. If this is going to reverse, if this is a fake breakout that's going to reverse, which I think does make plenty of sense considering the short-term negative demand news because of the extra cases and so forth, it's got to turn around pretty quickly. If it doesn't reverse quickly, I think we're just off to the races to higher numbers. And as that analyst that I mentioned earlier said, it's acting like Donald Trump. It's the bulls are so completely convinced of their case that they're not going to concede regardless of the evidence.
What's really, though, interesting, Eric, is that When you go to the energy stocks themselves, they have been a pretty good leading indicator of the direction of oil. I don't know whether this is a sustainable trend, but like back in the summer, energy stocks started selling off for months before oil finally broke down. And then when this turn happened, these energy stocks have been just leading the way higher, and they've just been continuously pumping higher. And then oil is always playing this game of catching up on these breakouts. And it's going to be really interesting to see whether or not the energy stocks are going to give the tell again this time around. That's certainly something I'm watching. Anyway, let's move on to page 10 and 11, which we have the charts of both gold and Bitcoin. Now, I intentionally put Bitcoin on a weekly chart because I really wanted to capture the bull market of 2017 on the same chart. But what we clearly have was this scenario that earlier in the year, everyone was talking about the correlation of gold and Bitcoin, and well, that's gone. I mean, at this stage, the Bitcoin has just blasted off to the upside, going full parabolic, and gold is actually distributing in here. I mean, with this breakdown, there are some major support lines and fib levels down on gold about $50 to $100 lower from here. I mean, maybe there's still potentially, $50 more downside risk on the most immediate term, but it's amazing that this kind of divergence has happened, and it'll be really interesting to see whether it does the exact opposite, that when Bitcoin finally peaks out, and I'm not trying to say that in a bearish way, but any parabolic rise like this always has its rise checked. You can go to any point in the previous rises on Bitcoin to see the distribution cycles that often follow. But what will be interesting is that if Bitcoin does put in a short-term top and starts to backfill this move, will that potentially see the opposite happen, where that money will find gold again? Do you think that it's as simple as that, or is it going to be a little more complicated?
Well, I do think there's a strong causal relationship here. And what's going on, I think, is that gold and Bitcoin are competing. The message that we see in the economy is very strong. Fiat currency is going to be debased by central banks around the world. Everybody wants to put on their favorite central banks debasing fiat currency hedge trade. Everybody sees the same fundamentals. It's just so clear as day. What's happening is there's two favorite instruments for that. Long gold is kind of the old folks version, and the newfangled version is long Bitcoin. And I think what is happening here is as people see Bitcoin outperforming gold, it becomes a self-reinforcing vicious cycle where people say, well, boy, I didn't really believe in this newfangled Bitcoin stuff. I'm not really sure what it is, but boy, it really is performing better. Okay, I'm going to sell my gold and buy Bitcoin instead. And I think that's what's driving this. Now, as I've said many times on MacroVoices, my strongest and most important rule of investing is never make the mistake of expecting that the market is going to do what you think it should do or what the right thing is. I think that the pro-Bitcoin argument is misplaced. I'm not going to go into a lot of detail on that because I wrote a whole book explaining why I don't think Bitcoin will be the ultimate winner in the digital currency revolution that's going to change the face of finance completely over the next 25 years. But I'm not the only guy, and there's a whole lot more guys who disagree with me than there are who agree with me. The people that are driving Bitcoin higher are passionately engaged in believing that it's going to be the center of the financial system, replace the U.S. dollar as the world's global reserve currency. I think they're crazy to think those things, but those views are getting a lot of traction and a lot of popularity. And the more that you see the price of Bitcoin outperform the price of gold, the more the gold guys are saying, okay, I don't really understand this, but I can see it's working better. I think what happens is exactly what you said. First of all, I wouldn't be surprised because right now we're just running into that previous high resistance where Bitcoin is struggling to get above its previous all-time high from a couple of years ago. If we see a breakout above 19,000 or whatever the old number was, I've forgotten, whatever the previous high was, and we start seeing 21,000, 22,000, I think it's going to accelerate from there, and you're going to see a blow-off where Bitcoin goes crazy, crazy, crazy up. That could very easily drive a substantial correction deeper down in gold at the same time. Eventually, as you say, there will be a blow-off top in Bitcoin, and that will create an incredible buy-the-dip opportunity in gold. I'm hoping that Bitcoin goes crazy, through the roof to the upside. Not because I'm long Bitcoin, I'm not, but because I think it's going to push gold down and allow me to buy more. I can't imagine we'd go below 1350, but if you wanted to know what's the one thing that might be the catalyst to get gold back down to 1350, it would be a moonshot in Bitcoin up to $40,000 or $50,000 or whatever crazy number it might be. That would be the thing that would probably cause a lot of faith to be lost in gold, and I think it's a buying opportunity in gold. I'm not worried about the Bitcoin rally. Eventually, reality will set into that market. In any event, Patrick, I can't say with certainty how that's all going to play out, but I do know with certainty that our listeners can get a free 14-day trial to your service, Big Picture Trading. Folks, for anyone who doesn't already know, Patrick does online webinars 4 days a week with chart decks like these, and you can get a whole bunch more details. So go to bigpicturetrading.com, sign up for a free trial. Information for signing up is on page 12.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.